I've got it. I'll share it with you. Thank you.
Do you have it? Okay, sweet.
Thank you, sir.
All right. Well, let me repost. Did that work? Right. All right. Yeah, we should be good. All right. You ready?
Yeah, I'm good.
All
I'm
right.
good.
I guess I'm back podcasting. Welcome to another episode of Wage Cucking with Jmo. Today we have Behrin, who's the founder of Neutrl. Behrin, how you doing today?
I'm not too bad. How are you doing? Also, I'm happy you're back podcasting. To be honest, it's been the best thing on Twitter. Your new arc for the last like 4 months. At least it's providing some entertainment. But yeah, not too
Nice,
bad.
nice. Yeah, the market's so bad that I need something to do with my time. But before we get started talking about Neutral, maybe give a little bit of a background of I guess how you got into crypto, what you did before crypto, and how you got to founding, getting into DeFi, especially the aspect of crypto.
Yeah, sure. So, I mean, I started off very traditional banking, and then I worked at one of the largest VCs, private equity companies, focusing only on financials. So, like acquiring banks, asset managers, insurers. And then after that, JP Morgan equities, so more on the listed side. And around 2017, I mean, I think that was when I first started dabbling into mainly buying Ethereum and trading Bitcoin around that aspect. And really fully like leaving TradFi and going into it was around DeFi summer. That's when I think I had an existentialistic crisis after COVID, which seems, yeah, I mean, it's a long time ago, but largely I could see this new world that could be built. I'm not saying it has been built, but largely where we were going towards around DeFi summer. And I left completely TradFi and then went into testing and playing around and becoming an early user and adopter of many of the DeFi protocols that have some have withered and some have become blue chips right now. And I guess with Neutral, it wasn't an idea that came around quickly. Also, it's a trade that we used to do, and it's a trade that is done in private markets. And like being around DeFi and yields, and also an early believer of Athena itself as well. Um, I could see that when funding rates does disappear, like it always does, or leverage leaves the system, yield will probably collapse, and we'll only
Mhm.
really only have treasuries. And in my view, as coming from TradFi, is why actually have things on chain if you're earning treasuries, right? If you're earning 3%, 4%, what's the point? So largely, we could bring this new type of trade that's available in private markets. It's just people like who have crazy access to it on the fund side, or big angels or investors that are able to do it. And that was the OTC of. And then we said, okay, let's do neutral if it makes sense, if it could make a big difference to the yield that's available. And yeah, it's been around for about 4 months now. So, well, publicly launched.
Yeah, I guess the closest comparison in this space is something like Athena. Athena handles their stablecoin a bit differently, where they're mostly Ethereum based. So they have like a one-to-one position where they have like spot Ethereum and they're shorting the perpetual or just like a general market of Ethereum and capturing the basis. But well, like you were saying, in times well, like now where markets are going down, the funding rates are a much lower, and then like the yield is a lot less attractive. So I guess talk about how neutral strategy is different and what you're doing to capture a new source of yield.
Yeah, sure. So largely, a lot of it that's backing neutral is similar to how Athena would work, except it's not stuck just to Ethereum or Bitcoin funding basis. We also have a lot actually deployed in this type of market in actual yield bearing stables.
Hmm.
So that's earning like the base layer, so it's liquid. The actual difference is we play around with this other type of trade that's called the OTC arbitrage, largely where we go to foundations or early VCs or big angel investors that initially got into the like top 50 to 100 tokens, and they are not liquid. So
Hmm.
largely they still have vesting conditions on their token allocations, and we buy those tokens from them at a discount. Last year it was ranging between 25 to like 80%. And at that point, you can buy a decent amount of slug at a discount from where the market price is, and then hedge the current, like the market, using uh, perpetuals. And we hedge it across various like exchanges. And at that point, what really would happen here is, as this vesting occurs, you're able to close and unwind that discount, which generates a yield. So you're closing the perpetual either in profit or loss, and you're closing the spot that's unwinding the profit or loss. So there's no price risk, but that's closed off. And that's just giving the bit of the kicker to the yield. Otherwise, Neutral right now would be delivering exactly what Athena is paying out,
Mhm.
or any other one of the 100 copycats, right? That exist on the funding rate basis. But it's the yield from the actual discounts unwinding from the OTC arb that we've done. That's what's actually allowing a bit more yield to be paid out.
Yeah, I think most people in crypto aren't aware of this source of yield just because it's not publicly available. I think
Yeah,
I guess it's more publicly known now. Like I think there's like a meme going around. Anytime a
is
founder
it?
quits like a protocol,
Oh
there's like
yeah, yeah,
the vesting cliff reach, stuff like that. But
yeah.
uh, yeah. So can you give a breakdown of the NUSD, the neutral stablecoin, in its current state? What percentage of the yield comes from the OTC deals, and what percentage comes from like other sources?
Yeah, sure. So the current backing of the actual neutral protocol and reserves, 97% of it is liquid. So that, when I say liquid, it's mainly in actual yield-bearing stablecoins like Sky and
Mhm,
Athena. The rest now is, outside of that, is some funding rate arb that we try and play on the liquid basis when it does pop in and out. That's been fleeting, to be honest. Like Hype was doing okay, it's disappeared again. If you're just doing normal delta neutral, the
mhm,
other 3 to 4% is the OTC arb, and that includes like just collateral. It's shrunk because we've been investing a lot of it, so it's all moving into liquid, and it goes into stablecoin after that, and then it sits in reserves. So it's still now it's quite a small portion. When we initially started, it was closer to 10, 15%, but those deals have vested, the discounts have unwound, and we've been unwinding them at the moment since the last like 3 months.
do you have an estimate for that portion of the yield? Like what percentage of
Yeah,
APY APR you're getting on them?
yeah. So on that portion, it's probably closer to 30, 40%.
Oh wow,
The
okay.
smaller portion. The yield-bearing stablecoin and liquid portion is low, right? I mean, that's anywhere between 4 and 6%. So we don't like actually do anything with those yield bearing. Either like just holding Sky, so you're earning 4% now. It was 4.5%, and Athena was fluctuating between 4 to 6, and it's a bit below that now. And
Mhm,
then Basis was doing okay. So look, to be dead honest, if we weren't running it as a stable coin, we could be a lot more aggressive on the OTC portion. We would have, because
mhm,
we believed that it would make money and in a safer way, which it did,
mhm.
and it does offer a better return. And I think it does provide an edge versus what else you could actually get out there at the moment.
That sort of parlays into my next question. I guess NUSDB would be considered a stable coin, even though it's more of like a tokenized fund or like a tokenized hedge fund.
Yeah,
Is there a reason why you went the route of being like a one-to-one USD stablecoin rather than just running the OTC side of things and having it as like a tokenized fund?
yeah, that's the big question that I've been asking myself over the last month and a half. No, but no jokes. Realistically, when we did decide to do the idea, it was a pretty full bullish like market at the time, right? I think like with the fund itself, we were running just north of like 50 mil like privately ourselves. It's enough to continue and pretty decently. You get a lot of edge and alpha at the time. What we were seeing is on the OTC relationship we had. So the other guys that joined Neutral with me worked at market makers, they worked at brokers, they've done this trade for years. And I think we all took the we could see the bigger thing that was happening. Like the secondary markets were seeing so much deal flow. There just wasn't enough buyers at the
Mhm,
time for a lot of the foundations. So, and we didn't have enough capacity, right? We said we could probably go out and raise a private fund and get to 200 mil or something, and then it's just a normal fund model. But I also don't think that was exciting enough for the team on what it could become, because like we have been doing it for a while. We do trade a lot in general, and we okay at that. So we basically, I was like, what could we do that's going to change the like DeFi yield space? And I spoke to the first person I spoke to him to see if it actually made sense was actual guy from Athena, and I was like, you created this entire beast, which is a tokenized fund, into an composable yield bearing token that's used across Pendle and Aave and Fluid and Mofo and whatever else, right? And that's how you get real scale, right? Like
Mhm.
versus just a normal private fund, and that's what we're shooting for. Because I think there's still so much capacity in the trade that we're like, we could do a fund, or we could try and build something that's going to be around for many years and offer the best yield in both bullish and bearish market. And at the moment, the bearish market, since launching, actually, to be it's not fun, but it is what it is. It has been the highest you could do at scale, like over 200 more. And I think that's what the driving force has been, to be honest. Like just to do something a bit more interesting than a normal fund.
You want to talk a little bit about how neutral or your history and like the people you're working with are uniquely able to acquire these OTC deals and just stuff like manage counterparty risk, make sure these deals are done, implement the proper hedges to make it a true stablecoin.
Yeah, sure. So I think to become, I don't want to use the word stablecoin that much because I think you hit the nail on the head. It is a tokenized hedge fund that's been come into a trade. That's almost like a yield bearing token. But largely, I was only going to do this if I could get everything solved backwards from the beginning, right? Not just like launch a random project, raise VC money and angel money, and then go try and do something. It's like, how do you actually make sure the business is successful? So we work backwards. Where will the actual stablecoin be used? It'll be used across Pendle, it'll be across like the bigger platforms and that element. Will there actually be other DeFi or curators that would see a need for this type of yield across markets? And we managed to do that. And then I was like, I need to get the team that's been doing this for a long time and not just randomly hedging their own angel bags, but you're running it at an institution. So I managed to get a few of the traders that I've known for quite a few years that worked at market makers and institutional desks. They believed in the idea, they bought into it, and we said, okay, let's start working on this in this capacity. The big element is counterparty and custodial. So like a lot of that, we actually the protocol is paying for. It's another thing that people don't realize. There's a lot of like, I mean, obviously, there's a lot of scammers in crypto. We all know that, but especially on OTC stuff, you need to make sure that these things are linked up with Magna, they're linked up with Fireblocks, with BitGo, with BitGet. Like all of that is run by the organization, and you have this relationship. So when you are taking across tokens, they're sitting on smart contracts. It's not just legal papers. They have to be contracts that can't be changed once the money's been delivered, which is how Neutral operates right now. And the other really big key factor is I've had relationships with the Sticks team. So Sticks is one of the biggest at the moment, probably the biggest actual OTC broker in the space. When we were thinking of the Neutral idea, we had done a lot of deals with them already. At that point, they were sitting close to like 100, 200 million in like OTC volume. And I was like, we could only make this work if we have supply. And we need
Mhm.
to have supply all the time, like the better supply. And I think what's happened is since deciding to launch Neutral, we initially actually, another factor which I think a lot of DeFi protocols don't do, and they're starting to do now some, but just run the money privately first, like make the yield and then launch it to public, like to show that it actually works. So we did that initially, and from that time, I say June last year to now, we've seen over $1 billion in OTC volume.
Mhm.
We've executed very little on that in current conditions, but you need to have the supply. So once I knew I had supply, I had the right team in place, and now we finally brought on some competitors as well. Like they've joined us, the guys that were at bigger protocols before. It just makes you a bit more secure around neutral. And the other element is I haven't seen my mother for instance, like 1.5 years. And then I saw her around December, and she's like, "This is a lot of money. Like, what's going to happen here? Is this going to like you should just give everyone back their money?" And I was like, "Yeah, I can understand that, but the reason why we are okay with it is like we work with a lot of custodians. Nothing actually. There's very little smart contract risk. The smart contracts only actually used to pay out the yield. And for like the actual token, all reserves are sitting in custodians, like institutional custodians, um, and multi-sigs, etc. So nothing can actually move. So I think security was a big thing for us to solve. We also work now a lot with Hypernative, with Groom Lake, with other type of security monitoring guys that constantly watching the protocol and custodial, etc. And a lot of that has operating cost to it. So I think you have to make sure the yield generating actually makes sense for it to be a sustainable business.
Yeah, that definitely makes sense. So you guys launched, I believe you launched a sort of private beta around maybe like 9 months ago, and then you were live on mainnet maybe like 4 months ago, I think. Is
Yeah,
that a
correct.
d during that time, did you guys learn anything from executing this to scale? I know you got to like at least a couple 100 million TVL. But like, you learn anything about the hedges you were doing, unwinding issues like liquidity? Did you ever have to unwind at a loss, stuff like that?
Yeah, so I think we always price every deal we do as if we're going to pay like ridiculous amount of funding. So, because I think what most people don't, okay, this is a terrible market environment. Leverage has left since 1010, so it's even worse. But pre-entering a lot of these hedges around June last year, it wasn't as bad. Um, what we saw is there have been periods now as you scale into certain names, you can't be too big into certain name. So you have to be like quite diversified across deal names, and you can't hedge on a single platform, right? You need to be across multiple exchanges.
Mhm,
And then there are going to be periods when, which has happened, where you're eating negative funding rates on the funding side. And what we've done there is, sure, most of this does revert. So with the discount coming to effect, you still like make a decent profit around like 20% of what we've seen. But if you don't want to pay that much, you need to actually get institutional borrow. You need to
mhm,
go to somebody and you need to swap it out. And I'm okay paying like 10, 12% if I know that's what I have to pay in funding instead of eating negative. And then you know the deal terms are a lot more secure on the trade side. So we haven't necessarily lost money, but the actual expectation about on how high the profit would have been if it stayed bullish um, was a bit more disappointing, right? But I think that's just the market conditions that we're in, and we're still delivering a higher yield than what's out there. But knowing it, I wanted to come out a lot harder, to be honest. It is what it is. So.
yeah, that makes sense. So there's just some unforeseen things that pop up that not necessarily put you in a loss, but just reduce the expected yield overall.
100% so far. We're also very picky on doing deals. That's the other thing I probably didn't I underestimated, right? I thought we would just um, I thought we may have a supply issue initially because you never know. But now we're getting a lot of random crap, to be
Mhm,
honest, also. So we haven't been deploying into that. And with those type of things, I think you have to start realizing the game that was being played last year, where a lot of DATs were being announced. A lot of traders were front running it, which
mhm.
made sense before the deployment. And then you have to make sure that you can handle like any type of risk if you're in those type of trades. All of those trades are now below DAT pre-buying anyway.
Mhm.
But sifting out and not being as aggressive on deploying OTC was also conservative on our side. Maybe that was a bit more of a mistake. Like we would try to be too conservative, but
Yeah, when you
it's
say
okay.
random crap, you mean just low liquidity, kind of like low tier projects that like there's higher like downside risk to them, just because like the overall quality of what they're doing.
Yeah, well, the protocol is making $2 and the company is valued at $14 billion, right? So I mean, yeah, it's just like other games, I guess. Yeah, you have to be wary to. I guess like the only thing being in this OTC like arena to some degree, you do kind of hear what people are up to. Um, it's just like making if you hold the hedge long enough, it's going to be in profit. But there's
Yeah.
going to be periods when you're going to have to take the pain, right, if someone's actually like scamming it or whatnot.
Mhm.
So we stayed away from playing around with those. But to be honest, like personally, those things made a lot of money because you knew it was going to zero afterwards.
Yeah, so you stayed out of those just because, like,
So
overall.
what's the risk for neutral, like as a neutral
Yeah,
user?
yeah,
Yeah, yeah,
yeah.
yeah.
Like but that does make sense though, right? That like the positions you have or the potential positions you have that have the highest upside probably also have the highest downside risk. So yeah, I guess it's for your risk management department to decide, what is what's worth the yield and what's not worth the yield.
Yeah, you
Um,
could do it personally, but you can't throw it into a neutral like product. Yeah.
Yeah, yeah, that makes sense. Um, so using the strategy, do you have a number or like a thought as to how much this scales and for how long? Like, I can definitely see, and not to be like a party pooper or anything, but I can definitely see like an environment like in the future in crypto where this trade doesn't exist anymore, or it exists with like a much smaller scale. So have you ever looked into this or back tested some data for how long this yield is sustainable and to what scale it is sustainable?
Yeah, so I think that it's something I always think about because I'm like, when you are trying to push a company and just knowing like our personality of the guys we work with, we're trying to be massive. It's not just a random protocol.
Mhm,
So we're always trying to see what do we have to change, what's changed in the market. I think the only thing that would change here is if somehow there's another way for teams or foundations to actually sell for like VCs and harvest funds that are underperforming, even though they're up still like 20, 30x from when they got in, uh, which I struggle to see. I think what would change is potentially we lose a lot of open interest across
mhm,
multiple exchanges for other tokens. But then we will have to go deeper into our relationships. For instance, right now we're closing probably our biggest OTC deal yet. And I'm okay doing it because it's a top 7 token. Um, and that should be well for a while. But yeah, saying in the bullish market, I could see this easily printing decent yields at 3 billion plus. In a bearish market, it's going to tough at like at 600, 700 more. You're going to start compressing.
mhm,
Because, but I think what we kind of reset our mind to, or well, I have it to some degree, is that, yeah, it doesn't need to be 15, 18%. It can be 8 to 12% in a bearish market at size and keep liquid to most of it to some degree and just be a bit safer. But it is
mhm.
a constant thought process because there's many things that are changing in crypto at the moment. The one thing that isn't changing is people are still trying to sell or some sort of degree, which is not it's not great because someone also said this the other day to me, like, okay, isn't it great because it's a bearish market, so you're doing well? I'm like, honestly, a rising tide lifts all boats. If it was a bullish market, we'd be delivering 30 to 40% yield, and
Yeah,
TVL would be like 5 times this at least, like in 3 months. So I think you have to look at it all in a pretty bigger picture.
yeah, that definitely makes sense. And like a comparison to Athena, I think one issue you guys might have an issue with is transparency for these deals and like where the yield comes from, because it's a little bit like
Yeah,
the Athena yield is like pretty transparent, but like if you look at their dashboards, like you can see exactly like where they're executing the hedges, like all the custody and stuff like that. Whereas because a lot of these deals are less transparent. There might be NDAs involved, stuff like that. You're not necessarily revealing to like the end user exactly where the yield comes from. It becomes a little bit of like a trust me, bro situation.
yeah.
So talk about a little bit about like what you do reveal to your users, and then like how you balance that or figure that out while running the protocol itself.
Yeah, I think that's a really big point. And it came into play really early into the protocol life because, I mean, like most of my team, we've been in DeFi for a long time. So you do believe in transparency. Like it needs to be transparent. Most of the stuff that happens in the space shocks you. Well,
Mhm.
maybe not us, but like it will shock other people. I don't think it shocks you either. But largely, so around, I mean, around we launched 10th or 11th of November last year. And a week before that, another DeFi protocol blew up because they were doing stuff off chain, completely risky stuff, and with options and stuff that wasn't even in the mandate of the protocol. And the
Yep.
funny thing is, I've known those guys and their LPs for years. And even when I spoke to them last and they were telling me the yields they were doing, I was like, I made a meme internally. I mean, I don't share this public, but I was just like to my team, I was like, how can you believe this, right? Realistically. I said, the biggest thing we're going to have to solve is, yeah, sure, we can play into what's plugged into our exchanges, um, which a lot of protocols didn't have before. So we started working with Accountable, and they were still new at that time. But I was like, if I needed to know, I want to make sure the money actually exists. Um, Somebody needs to be able to plug in. Somebody needs to be able to see that it's verified. So that's fine. You can plug into Binance, Bybit, Hyperliquid, whatever, right? I mean, Hyperliquid is transparent, Coinbase, etc. Now, the problem with the OTC ARB stuff is there's not so much NDAs. It's more the risk of, okay, if I'm has a position in like SUI or whatever, right? Or AVAX or whatnot. And then if there's a market maker out there that's not really like a friend, um, you could try and blow it out. And that's like the structural risk on the hedge side. So I think
Mhm.
we've been pretty safe on like sizing, and we're still trying to work out how we can show it out. But like right now for larger LPs, we have shared a full or we're working on a full like OTC position, like actual like underlying. But even that is it's something that I've tried to work on in like ZK, but I don't know if people even believe it, right? There's like a moving type of way of to try and get away from the trust me, bro. Because I don't believe attestations either. So like accountable, I'm fine with because like I know they plugged into other guys like Ouroboros and Yuzu, etc. So they can see everything. So that's where we're working with them. But the only way we can do this is like I think continually like advancing our transparency and continually trying to show a bit more, and hopefully the user likes it. And then we probably have to get to a point where we also issue NDAs if it's something like really large, so LPs can see or look into it, or big curator or something.
Yeah, I think it's quite difficult just because if you're doing like these large OTC deals, the last thing your OTC counterparty really wants is the OTC deal to be, like publicly verified, like on a ledger that even if they're not docked specifically. Depending on like the size of the OTC deals, I feel like there's probably only a handful of people that can be the counterparty on these deals. So even if you're not like naming them publicly, it's kind of obvious who's selling or like out of a certain group of people like that have that size to sell, who's selling. So yeah, it's a difficult spot to be in because you want to be as transparent as possible if you're running like a tokenized back stable coin, and not being able to you know
Yeah,
describe the exact backing is might be an issue in the future.
I'm constantly working with trying to find a way to prove this without destroying the trade, right, or destroying the
Mhm.
supply. And I think you hit the nail on the head there. It's like um, not everybody is afraid, like worried that they sell OTC,
Mhm.
but it's more like some people maybe, right? Like if a VC comes to us and they're harvesting into like an entire fund over time, and we sign a deal with that, maybe new protocols don't want to work with them, or I don't know, right? Or their LPs have an issue, and that's like something that we are working towards. Also, the other part of it is like we actually are very safe. So it's kind of irritating that I can't. We're not like trying to juice anything, but until I can show everything, like you never get the benefit of being fully transparent either. So it's
Yeah,
interesting.
I guess that's the other part of it though is because not everything is transparent, the yield itself isn't transparent, and then I know that have been previous instances in the past with DeFi protocols that like run a similar model where it's just like where like a vault curator or whatever, and
Yes, yeah,
you're not sure what's happening in the back end, and they might be skimming yield or that
hundred
they
percent.
might be doing something nefarious, and just because it's not transparent, like the end user will never know like exactly how much they're taking off the top, or like even worse is sometimes like you were talking about before, like the DeFi protocol that blew up, they are losing quite a bit of money, therefore like the vault isn't fully backed, and like the dollars that are being used like in that specific position aren't actually worth $1, and then Because DeFi
100%.
now is so intertwined, you know, like it's so easy to access leverage, like people are hypothecating positions to use as collateral. It does have a domino effect, especially like when everything is so interwound. Like if there are a large stable coin doesn't have a one-to-one backing, that causes major issues for quite a few protocols that exist
It's
in DeFi
massive.
today.
It's massive issues. Like honestly, I don't think we fully recovered. So like 1010, I mean, as a trader was ridiculously like apocalypse, like a Armageddon.
Hmm.
And then DeFi was still fine. And then 1 week later, this other protocol blew up, and then there's curators that blew up on like Morpho, and there's, I mean,
Yeah, yeah.
none of that
Yeah, like
recovers, right?
in that example, I think we're thinking about the same protocol. But in that example,
Yeah.
one curator blew up, but then like a bunch of other curators had like that curator's positions like within their vaults or within their
Hmm.
positions. So like then like the whole unwind situation became like super messy as to, you know, who is using who is using them as for collateral, you know, who had positions in them, and then like a lot of the, especially like stuff like on Morpho or Euler or like the other
Yes, yeah.
the other similar protocols where these curators can just, you know, launch publicly available positions without it's like semi-transparent, but like you have to really dig through a wormhole to figure out like exactly where the money's going and what's being used as collateral and stuff like that.
It actually made me think twice around like who, I mean, curators are able to do DD on protocols, right, and collateral, but we actually do DD on curators because I was worried that maybe some curators, even though we're launching and they had promised to create these lending markets, etc., for NUSD, and I was like, what if these guys are bankrupt, right? And the realistic thing is that we like start getting connected to them just from like a relationship or branding before even starting. That means neutral like is already lost. Like, so we actually halted all like lending and everything. So we just like let's just go slower because I don't know what the situation was across the market at the time.
Yeah,
Um,
it's pretty wild out there. Um, a few other things I wanted to talk about. So, what is the future of Neutral? I know you talked a little bit about, I guess, the Athena and like the general flywheel they've developed now that they're everywhere. Like you can use USDE as collateral on, you know, like Aave on a lot of centralized exchanges and stuff like that, and that just adds to the ease to access liquidity, ease to access leverage, and like just increasing the use cases for the for the stable coins itself just leads to like a brighter future for the protocol. So I guess to talk a little bit about like the future of Neutral, like what you're looking to do, what you're looking to integrate in, and stuff like that.
yeah, I think the longer you like go through this more bearish cycle, I realize that we are trying to still onboard non-crypto people in the
Hmm.
sense that some of our LPs aren't actually crypto people or DeFi, they're actually family offices. So it's like working with partners there that are making it easier to onboard like a family office based out of London or the UAE or whatnot. And I think they're okay with a yield closer to 8 to like 10% in this environment. It's also
Hmm.
neutral. So we're playing that angle a lot more. There was many protocols that reached out on the use case of NESD on like perp exchanges and a few other things. I honestly think that's still early days for us. We need to like continue building out, so we put that on the back burn for now. But one thing that we are working on pretty strongly right now, and I was in Hong Kong last week working on this, is basically using neutral as a more savings tool on one of the sexes. But I
Hmm.
think distribution is key, right? I mean, you can have your collateral anywhere. Realistically, it all comes down to distribution in crypto for anything. It's, we may think this is a big world, but it's very tiny when you come from finance and like a TradFi background. How much more exposure there is out there. So that's a one big move that we're trying in the next couple of months that you'll probably see. And I think the other DeFi flywheel stuff is quite interesting. Like Pendle has been a great partner. I think they're a great protocol. I've used Pendle like from the beginning when it was 150x lower than this on like market cap. and the team is pretty solid. So they've been great on that element. And there's a few other protocols that have started working with us now that are really good teams from what I've seen. So Strata, for instance, they started just building on the Athena ecosystem,
Mhm.
tranching actual USDE or SUSDE to junior senior tranches. They released a version of Neutral's SNUSD about a week and a half ago. And what we're seeing there is it's a bit friendlier for people who are a bit more risk conscious, like going to a senior tranche. So that's a distribution angle. And then Royco, which is also another institutional player, has done something similar. We had a lot of curators reach out over the last month and a half. I think that's just because yield is so poor in across DeFi. So there's a lot of that in the works. What I think is the bigger thing is like this is the year of vaults and like infrastructure. Every man and his dog is building a vault right now, and a lot more TradFi focus as well. So we are working with a couple of these more TradFi institutions
Mhm.
that can understand the trade. The interesting thing is like the neutral trade. If you speak to someone in non-crypto like background, in general, I mean, you get it, but other TradFi, they understand this. They're like, okay, this is a distressed investing trade or some sort of
Mhm.
liquid hedge fund trade. So I understand it more versus like selling them on, okay, you're getting yield from an RWA treasury, whatever, and governance token emissions, right? They don't even know
Yeah.
what that is. Um, so I think there's a few things in the thing, but we're not trying to rush it. I think it needs to be quite strategic and quite meaningful on distribution side, and while maintaining like a decent yield. Because the other
Yeah.
aspect we have, sorry, Adrian, no, like, but I've seen other farms. You just want to like come out and blow out everything and create crazy yield, and that's how you can almost fall into a trap, right? Also, to some
Yeah.
degree.
Yeah, I was gonna say, it's kind of crazy that there are stuff like perp dexes that are coming to you looking to
I
use
know.
NUSD, and you're the one rejecting them. Whereas, like, in my eyes, it should be the other way around. Like, they should be a bit precarious of like a newly launched stablecoin that's only been around for a little bit, as like a use case for collateral on like a perp exchange that offers like high leverage and highly volatile assets.
Yeah, fully agree with you. So I think that's why I'm like, I don't know if this Perpdex will even be around. So- but it's like it's something we rather work on to creating neutrals as a savings vehicle product and distribution in like more safer hands than started throwing around as collateral right now. It's not a bull market, and I mean we need to build up for people to believe that it's actually backed. Right? It's only been 4 months.
Are there any specific metrics or like certain points where you get to where you'd be comfortable or safe to um re- work with these perp dexes, or work with any protocol that would like to use NUSD as collateral?
Collateral for trading.
Yeah.
Um, look, that would be the end state. That would be a great use case, right? That's what actually made the USD do really well, especially the Bybit angle
Hmm.
and now with Hyperliquid. I think we have to get to a lot more scale, right? And we need to get to a lot more liquidity. And then even on the reserve side, even though it's quite high, but I mean, we're only at like 220, 230 or something in 4 months. Like it's very early days to like be comfortable. Why would I even use NUSD? I mean, my wife has a savings in this, and I told somebody this last week, a fund, and he's like, "Man, are you sure that's safe?" I'm like, "Yeah." I mean, I do this every day, but I don't think I'd use it as trading collateral now. Like, it's gonna. We need to get to a lot bigger scale. To be honest,
Yeah, that makes sense.
it's our name
um
behind it, otherwise, right? Also, and it's like, yeah,
yeah,
what's the point
that
of it?
definitely that definitely makes sense. Yeah, so also, have you considered going cross chain? I know the NUSD token, it is a layer 0 OFT
Yeah,
standard token, right? So you could seamlessly move it cross chain, and now there seems to be like quite a few highly funded new L1s launching, either for stable coins or just for general use. A lot of them haven't been doing too well, so I guess is the downside to them. But are there any of these markets that interest you, or like anything in that space that you could potentially work with in the future?
yeah. Honestly, I think the end game is to be as like many destinations that actually makes sense. I think that's like you kind of summed that up. There are many. There are some that are doing decently, and where neutral could probably do well. We've been chatting to them. Um, we've already tested it out a bit with some of them. But for neutral to do well in a different market, there needs to be some activity. Like I don't see the point of us just going somewhere for the sake of saying, okay, we're not trying to get a grant or whatever. Like it needs to actually be valuable. So like even before launching, there were quite a few L1s that offered incentives to do something. I think there were three right now that I'm looking at that I think makes sense. Like we should be there in the next couple of months, and it's pretty easy for us to be across there. But outside of that, there's not much activity,
Mm.
and you need to also have a use case to be there. And for me, it has to be distribution. Like I'm thinking from like business owner of Neutral, right, or they're trying to create value for Neutral. It needs to be distribution. There needs to be some sort of like symbiotic or like composability for us to do something there, or we actually are there creating value for their users, and there's some incentive for Neutral users to be there. Because otherwise,
Mhm.
we'd rather just stick on Ethereum or move to like Solana or something. But even Solana doesn't have as much DeFi right now.
Yeah.
So Ethereum mainnet is where we rather grow our name and then move across.
Yeah, I guess this is a more general question. But what do you think the state of DeFi goes from here? Like, I think in the past, I don't know, like a year or so, there have been a lot of these chains that have been popping up. A lot of them, like, specializing in DeFi or like on-chain activity. The main issue is a lot of the TVL that goes to them are incentivized. So, like, a chain launches, chain incentives. They pay out high yields, but the yields aren't sustainable because they're just incentivizing with their own
Tokens.
token rather than accessing like natural yield. And then the initial hype sort of dies off, and then like you see it time and time again. I think where like a lot of chains, a lot of protocols, they have like an initial spike to like hundreds of millions, even like billions of TVL, and then from the peak, within like 6 months to a year, they lose like 80 to 90% of it, and they don't really get anything from all the incentives that they've run. Like the users were bid there basically for the incentives, added sell pressure to their token, and then kind of left for like the next chain or the next protocol. Um,
You're basically summing up the neutral trade here.
yeah, which is why you guys are making so much yield, is because you have access to all these OTC deals. But I assume the cycle has to end at some time in the future. So where do you see DeFi going from here? Like, is there going to be like another DeFi summer? Is on-chain yield going to be more sustainable? Is it going to be more less incentive based stuff like that?
I honestly think that we concentrate in the short term. So, I mean, in the last year and a half, there's been a lot of protocols and a lot playing those games that you mentioned. And it isn't hard to get TVL. I know that sounds like may sound silly, but like you said, if you do go around and you offer enough tokens or deals to liquid funds or yield farmers or extract, it's not that hard to get it because people
Mhm.
are very cash rich over the last like 3 years. Um, right now, I think it's only going to concentrate into like three or four chains that actually have real activity. Some have paid out a lot of tokens, right? And their
Mhm.
governance tokens suffering now. But the one bull case I would say is like, yeah, they still kept like a couple $1 billion in TVL. So it's pretty decent when you look at what's actually out there in general. Um, I honestly think like we're going to go very institutional. So people are going to probably come into crypto, but slowly, right?
Mhm.
Unfortunately, it's like DeFi summer is when everyone thought in like 3 years the whole of TradFi would be into crypto. I don't think that that's going to be the case, and I think we saw that for a while now. It's not anything new, but people will start dipping their toes into these chains that actually have some activity. If you can keep it going for a couple of years, yeah, you'll get the banks and you'll get some of these other like asset managers coming in, like through probably a third party curator or infrastructure provider, and then playing on these type of trends. But I don't think we'll see anything crazy. I'm hoping we get DeFi Summer again, of course, right?
Hmm.
Personally and for Neutral, but like, um, yeah, see, I think it'll be tough for a while. It's just
Yeah,
about staying the course and delivering
yeah, I think
for the
especially
store.
like in markets like this, especially when you talk about like the TradFi people coming over. I think a big issue now is just like the performance of everything, like the whole
Mm,
DAT craze. Like if you look at the performance of the specific DATs, they're pretty terrible. Like all the ETFs, like
super. Yeah.
the if you look at like people like Tom Lee is just underwater billions and billions. It's just not a good look and doesn't really attract the like if it was a bull market and like all these things were going up, then I could see like a bull case where like all the TradFi people would be coming in. But like in its current state, like it's if they do come in, though, they'll come in slowly and they'll come into
Slowly. Yeah.
more safe, guaranteed types of yield rather than like speculating on more speculative assets.
Yeah. So I mean, I was chatting to a few that are still trying the RWA thing, right? I mean, RWA, it's obviously expanded more than just US Treasuries now. So I think like that's probably it, but they're not going to come in full force. They're going to dip their toes in, and then hopefully it's set up for the next cycle. But I mean, JMO, on your side, right? You're a better trader than I am, of course, right? So
I'm not so sure
you
about.
there has to be a price like when you're buying again, right? Maybe not now, but I think there will always be a cycle. Like, I think we've seen that, like, because people are getting super bearish now, and I can go on the super bearish bandwagon because it makes us look better on the OTC op side. But there will be a time where I feel like the cycle will turn again, and you've seen it with some VCs raising, right? Most are dead, but
Yeah.
some are raising funds again because yeah, it's the way the investment world works, I guess.
Yeah, like that specific asset aspect is kind of crazy to me. Just seeing some of like the recent raises, like I'm curious, like how people still have money and where this money is coming from. Like, but
Oh, it's real.
yeah,
Not just an article. Oh, they were raising for 4 years. Who knows?
yeah,
It's also like what you hear, right? But I think like solid DeFi protocols aren't leaving. Like always going to be a Pendle's always going to be a Athena, Sky. Um, it's like that in between phase, and where neutral is now too. It's early in the life. It's like we'll have to stick around before. It's harder to. You have to be here for longer now to prove yourself, right? Versus like a
yeah,
full bull
yeah,
market, and
yeah.
which is fine because it's sustainable. But I think a lot of people will drop away.
Yeah, you
And
definitely need to prove yourself in a way that you are providing, a service that people will use long term, regardless of incentives or regardless of like bull or bear cycles. Like if your product
100%.
is good and people are using the product, then like I don't think anything else matters. Like I think crypto has gotten to a point where it's carved out like a niche use case, especially DeFi, like stuff you talk about, like so something like as simple as Aave, where you can borrow and lend and stuff like that. There's always going to be demand for that, and if like even if like the bear market continues, there's still going to be demand for people, depositing collateral and borrowing assets at like reasonable rates and creating a market like that on Aave. So just protocols that have like a fundamentally sound base thesis of like how we're going to operate, what services we're going to provide that's sustainable long term. I feel like are going to last no matter what.
I fully agree. And I think honestly, for our traction, there hasn't been any other like no one cares about points now. Like let's be serious.
Yeah,
It's literally just because the yield is being paid out, and I think that's what's been interesting, in the sense that just keep paying yield, don't lose people money, and stick around. Like that's probably the way we play it out in the next like couple of months, and then do some good integrations. Largely that makes sense. Like that's not risky. So
yeah,
this
I
is
think I think the points meta is definitely pretty dead right now. I mean, like you just have so many angry people like in the space that have deployed capital expecting like a huge payoff at the end, and then like the payoffs become less and less. Like the first batch of points programs resulted in like really high returns, and then like the expectation was there that like everyone would just be super rich just farming these protocols. But then I don't know, there's so many popped up that either were copycats or, didn't necessarily demonstrate like a niche use case. And then like we were talking about before, the TVL was propped up by points or
Hmm.
incentives, or I mean, points are essentially incentives, like without quantifiable yield, right? Like instead of like looking at a number on a screen saying like you're earning X
Just more
percent,
speculative,
it's
but yeah.
yeah, it's way more speculative. And then like people learn kind of quickly, like the speculative amount could be like literally nothing. So yeah, I think that's over. And I don't know, like to me, I think for DeFi, if we can get that out of our system, the pastures are greener in the future. Like we can develop stuff that like people will actually use rather than just like go off this. We're gonna print tokens. We're gonna fork Aave, and we're gonna do the same playbook over and over again on like the 20th Ethereum L2, or like the newest EVM L1, which I don't know, it just doesn't really make sense to me.
Yeah, it doesn't make sense to me as well. And I think that's why we had this thesis that Neutral would work, in the sense that there's too many projects, too many tokens, all doing the same thing, right? And fine, it works in a bull market for a while, but after a while, when the reality sets in, like people are gone. Like they've extracted what they can from it, and it's done. Um, which is, yeah, I don't know. It's unfortunate, but it's how crypto has been. There's been too much capital for a while. I think it'll really go down to actually doing real business in this
Yeah,
bear market, like,
yeah,
and proper relationships and partnerships.
I think so as well. Um, yeah, I think that's all the stuff I wanted to chat about today. Is there anything you wanted to add, or maybe let the listeners and viewers know how to reach you whenever you put out content, or updates on Neutral, stuff like that?
Yeah, sure. Like, to be honest, we're gonna be around for a while, so I'm not shilling Neutral. Just check how it is. You can see that the yield has been pretty decent. You can contact us at Neutral, Neutrl, on Twitter, or at Behrin, at Behrin. And yeah, we're gonna stick around in this bear market and continue delivering yield. that's that's
Awesome,
largely
awesome.
that's largely all we can do right now.
Awesome, awesome. I appreciate you coming on.
Thank you, Jay. I appreciate the time.